I'm Orna Ered with Elite Residential Realty, and today I have the pleasure of talking to Kevin Gusinow. Kevin is in the mortgage industry. He's been doing it for 30 years. And I actually met Kevin probably about 20 years ago. And the way we met is I was representing a seller, and at an open house, a buyer came in. Do you remember that? And wrote an offer on that house, but couldn't qualify for a loan. And my seller is like, "You got to call Kevin. He'll get him a loan." And sure enough, Kevin got him a loan. And do you know he still lives in the house?
Really?
Yeah,
Wow.
he's still in that house. And so I always say, if Kevin can't do it, nobody can do it.
I agree.
So Kevin, will you introduce yourself?
So I'm Kevin Gusinow. I've been doing financing for 30 years, straight out of college. I sit on the board of the biggest quality control company for mortgages in the United States. We review all of Fannie, Freddie, bank statement, jumbo loans, so I stay up on all the regulations and new trends in mortgages. So it's very helpful and for my business as well as the experience.
Okay, cool. So let's talk loans.
Okay.
Okay. So the salaried employees with the good credit are really no-brainer. So I actually want to talk about the more challenging type loans that you have to handle. So let's talk a little bit about first-time home buyers.
Okay, so first-time home buyers, really there are no real first-time home buyer programs. First-time home buyers to me are low down payment, their first home, which is FHA loans. FHA loans are the cheapest way to get into a home at 3.5% down. In Los Angeles County, that's a home of about $800,000 because they're all government-backed by Fannie and Freddie. They do allow for poor credit, so you can have a low credit score of 580 and up, and they allow for gift funds. So basically, somebody can almost get into a home for no money down, as long as they have a job and they can bring as many people, family members, as they want to help them qualify.
Oh, really? That's great.
So it makes it as easy as you can to get a loan. However, it does have lifetime PMI.
Oh,
So-
lifetime,
so-
so they cannot have.
So private mortgage insurance is for life on there.
Mm.
So you're never going to get rid of it, and it's expensive. But if that's your only way in, you can always refinance the loan because there's no prepayment penalties. So once you establish yourself in the next couple of years or values go up, you can always refinance yourself out.
Oh, okay, that's really interesting. What about the self-employed?
So self-employed borrowers since 2008, since our debacle, have had a real problem of getting loans because it's always been about ability to repay due to Dodd-Frank. So they've created some new loans for these people now, bank statement loans, where you can use 12 or 24-month bank statements, personal or business, to help you qualify using the deposits on there. And depending on your business, we'll give it an expense ratio. You can use 1099 income, and if it's a non-owner occupied, then there's no income necessary because that's outside of Dodd-Frank. So
Okay. And that's all instead of having to show tax
that's
returns?
all. If your tax returns don't qualify you, you can go that route. Correct.
Okay.
And you'll pay a higher interest rate, obviously, and they're usually shorter-term loans, like 5 or 7-year loans, but they're out there.
Okay. What happens with those after 5 or 7 years?
They go to adjustables. All loans are amortized over 30, so there's not a balloon loan out there. And if it's owner-occupied, there's no more prepayment penalties on them. So that's a good thing. That's one of the new laws from Dodd-Frank. They don't allow owner-occupied residents to have prepayment penalties. So only for non-owner can you have a prepayment penalty.
Okay. What about the buyers out there that want to buy, fix and flip, or maybe add an ADU to their property? Is that something that they can get financing for?
So fix and flip is becoming the biggest space, or one of the biggest spaces. There's about 5 huge fix and flip lenders out there. Because fix and flip is non-owner, there's no income to qualify for. So on your credit score, the property itself, and they'll go as high as 80% of the value of the home. So you could buy a home for 80%. So if it's $1 million, you only need 200,000 down. And depending on the improvements you're going to do and the future value, they may even finance most of that as well. You're going to pay somewhere it's almost like hard money. You're going to pay somewhere in the 8.5 to 11% range for that money. But then they're 1, 2, and 4 year loans. And they do balloon. So those are balloons. But they're really, if you've had experience doing it, they're really easy to get.
Okay. What are the points on those?
Usually 1.5 to 3.
Okay.
So it's kind of like hard money. Yeah.
Okay. So who are those lenders that is different than hard money lenders?
So I mean, it's like the Civics of the world. Finance of America has programs. Usually there are like 5 big ones across the country. There's Renovo in Chicago. So those are the 5 big players that do it, but everyone is starting to create a fix and flip program. So you will probably see more, and with more, we'll see lower interest rates because more competition.
So if they did want to build an ADU on the property, then that would be part of
The
the cost?
The ADU is different because the ADU, they're not going to finance the whole property. So ADUs, usually you could get a line of credit, or you want to get cash out to build the ADU, which is usually your garage. It's like 440 square feet. But there are companies out there right now that will finance that for you. So up to usually 85 to 150,000, and they'll do a revenue share. So you could actually get a company that'll sign a contract with you. For 15 years, you'll do a revenue share with them, and it's got a lease. So even if you want to sell your home later, which it adds value to it, that lease will stay intact, and the new owner will have the revenue share with the company that actually does it. And then you could always refinance the whole property out and pay them off the money they put into it, and then you would have a rental property on your property.
That's a really interesting option. Okay, let's talk a little bit about the older type borrowers with the reverse mortgage options.
So reverse mortgages in the last 2 years have really changed. They're for people 62 and older. So if you're married, the wife doesn't have to be 62 to be on the loan.
So the older of the two?
No, it'll go off of the younger of the two, so you'll get less money out. So let's say your home's worth, let's go with $1 million again. So most reverse mortgages only go to Fannie Freddie guidelines. So $765,000 would be the limit as far as the value goes. And then they usually go, depending on your age, you'll get more of a percentage out. So if you're just 62, you're probably going to get 25 to 30% of that value. Even if your home's worth more, they're going to base it off of that. And then the reverse mortgages, today, you don't have any payments. You just have to pay your taxes and your insurance and keep the property up for life. They've lowered those because people are living longer than before. And you can will them to your heirs. So once you die, your heirs will have a year in which to sell the property and whatever to pay back the loan, and whatever's left over will go to them. So before, the whole thing was, oh, the bank's taking my property. So they've kind of gotten rid of that. And the other nice thing is you could actually buy a home with a reverse mortgage. So like if you're 62 or older, you may only have to put a portion of it down to not have a payment. So you could actually use it as a tool to purchase a home. So if you're 80 years old and you want to go buy something, you can actually transfer your tax basis if you are in the same county and purchase a reverse mortgage and have no payments and very little down to do it. So
if they're married and one of the spouses died,
it's still, as long as they're both on the loan, they both have to die in order for but you can't have a reverse mortgage where the person dies and the family member moves into the house. That's not, they have people who go knock on the doors and make sure that the people are still living and taking care of the property.
All right, and the last type of programs that I would like you to talk about is about foreign national investors?
So foreign national investors are, there's quite a few programs out there. Most of them require about 40% down for the purchase. Some of them don't require any income documentation. They just require them to have either a social security number here. They may not even have one, so they can do it without one. Or maybe they file a tax return from other rental properties they have here, so that would qualify as well. The more aggressive foreign national programs with 30% down would require us to get income documentation from them from wherever they live. If we have to translate it, we'd have to translate it, so that might become a little more costly because bank statements in different languages have to be translated to English. But foreign national loans are generally non-owner investment properties and can be done with no income documentation, no social security, no credit. The only reason we would need credit or income is if we go for the more aggressive, lower interest rate programs, and they may want to document it for where they
What
live.
are the average interest rates on those?
If we do the no income, you're probably in the 5% range. And remember, their investment property is 5 to 5.5. But we just did one, and he got 3 7/8. But he documented assets, income. He was from Indonesia, and translation of all that stuff. So.
And if I remember from the ones we've done together, they have anything that has to be notarized has to be at the American consulate at their country.
Yes.
So you always need to allow for a little bit more time
Yeah, that's a good
on
point. You have to
those
budget.
loans because it's hard to get an appointment at those
Yeah,
consulates
some
right
take
away.
2 to 3 weeks.
Yes,
Yeah.
so
you wanna
that's
schedule
something
that.
to keep in mind. Well, thank you, Kevin, for coming out.
Thank you.
Do you want to tell us how we get in touch with you?
If you have any questions, you can always reach me by cell at 818-929-2660.
Wonderful. Well, thank you.
Thank you very much.